This is a Geek Leader podcast, and I'm your host, John Rauda. This show is all about helping us grow as leaders, become better technologists, and improve our lives both at work and at home. I hope you enjoy the show and learn a lot. Welcome to a Geek Leader podcast. I'm your host, John Rauda. And if you could, please do me a favor and take a moment and leave a rating and review in whatever podcast player you're listening to this on, whether it's Apple Podcasts, Spotify, iHeartRadio, doesn't matter. I would greatly appreciate it. And that feedback really helps get other listeners to the show. Also, if you're not subscribed, go ahead and subscribe so you don't miss an episode. And if you feel so inclined, you can go to geekleader.com/tip and donate to the show. Thanks so much. All right, Geek Leaders, today I'm honored to have Lisa Nestor on the show, and she is the Chief of Strategy at Airtm, which is an innovative online platform for financial services to help people around the world. So it should be a fantastic conversation. Anyway, with all that being said, Lisa, welcome to the show.
Thank you so much for having me, John.
If you don't mind, just tell the audience a little bit about your background and how you got to where you are today in your career, and what is it that you do at Airtm?
Sure. Well, I'll try to hit the highlights here. As we were just discussing, I'm originally from North Carolina, born and raised there, and went to undergrad there. And then when I was 21, I joined the United States Peace Corps and was sent to Mauritania, which is in kind of the northwest part of Africa, very desert-oriented place. And I lived there for 2 years doing small business development in a pretty rural village. So super impactful experience to start off my career. When I reflect on that time, just a ton of learning, understanding different cultural perspectives, really having to kind of bootstrap my own path forward. You're not given much structure in those types of roles. So really figuring that out. And when I was in Mauritania, I found a book called The Village Savings and Loan Association Manual. And in my village was able to start a savings and lending association. There was no bank or really any local banking services for people there. And that started me down a journey of being really curious and interested in finance and economic infrastructure. Really cool project, just helping a small community basically get access to credit through a system that helped to pool their own savings. And from there, became more interested in this broader field called microfinance. So came back to North Carolina for about 9 months and then was shipped over to India, where I lived for 3 years and essentially worked for a couple different professors leading on-the-ground field research studies in India around microcredit, microsavings, just different types of financial products and services that were focused on the underserved. And that, again, was a super impactful experience. In that role, I had much more of a leadership position where I was overseeing a team of individuals. So I would say a huge takeaway there was just having to kind of think 2 or 3 steps ahead as a leader, because when you have, a big team under you, you can't waste time. When you waste time, you waste resources. So that was a really big lesson. From there, I transitioned to getting my MBA at the University of California, Los Angeles, UCLA. I'm based here in LA now. And I kind of formally moved into the fintech sector from there. For those who are unaware, fintech is really like finance and technology. Mm-hmm. So when you think of your Venmo, your PayPal, your Cash App, those types of companies. And that was great for me because I could kind of continue down this path of financial infrastructure and kind of how it impacts people in their lives. For my MBA, I transitioned for 1 year into a fintech company called Payoff, which was great. And then a professor from UCLA kind of disrupted that path and reached out to me and said, hey, I met this company and this guy, and I think you've got to talk to them. It's right up your alley. You've just got to do this. And that person was Jed McCaleb, and the company was Stellar. the Stellar Development Foundation, which oversees layer one blockchain. And this was in 2016 when blockchain was really starting to heat up. And to be honest with you, I did not have too much of a tech background, but I was completely hooked on the idea of creating these universally accessible financial ledgers, which could help kind of democratize access to financial infrastructure. So I jumped from Payoff and moved to Stellar, where I led partnerships and really focused on trying to get businesses to adopt a very new cutting edge technology. I was at that company for 5 years, grew an exceptional amount, learned so much about strategic partnerships and, kind of putting yourself in the customer's shoes and thinking about how you explain your product, not from the technologist's perspective, but from the user's perspective. And then after about 5.5 years, decided that I was ready for a new challenge. And that's when I was introduced to Airtm. What's cool about Airtm is that they are actually one of the largest applications running on the Stellar blockchain. Stellar is very much a infrastructure level technology, and Airtm is a consumer application. So I like to think I kind of went up the stack, and I became a user of my old company's platform. And I really, over the last 2 years at Airtm, as Chief Strategy Officer, have gotten a, we'll say, fast learning course in what it means to really be an executive and a leader at a consumer application company, where your product's live 24/7. You've got users all over the world, and you've got a team of people across multiple different divisions in the company who really need to coordinate and execute together. And so that's what I've been doing the last two years at Airtm, helping them both think about strategic partnerships, but then also really focusing on the company's internal operations and driving efficiency and coordination across multiple departments.
Awesome. I definitely want to talk more about your role there. But before we do that, I want to back up just a little bit for people that may not be aware of some of the things that you talked about there. Can you explain microfinance and what is that exactly, and what's an example so that we can kind of all relate to that?
Sure. Yeah, love to. So microfinance was really, I think the term comes from the idea of giving small loans to people that typically wanted to borrow at a size that wasn't economical for banks. So, if you're a banker, and to process a loan for an individual or a household or even a business, that takes time and money. You have to underwrite that loan. There may be ongoing checkups that you do to make sure that the loan is being repaid, especially if there's any default. There's continued follow-up with that client. And so what that means is that for most banks, there's kind of a floor, meaning you're not going to do loans that are under a certain size. And in the early 2000s, there was a gentleman named Muhammad Yunus, I believe based out of Bangladesh, who started experimenting with lending small amounts of money. We're talking maybe $50, $100 to individuals who are typically unbanked because, or certainly weren't getting loans because they were poor. And the loan size that they could repay was lower than what the bank kind of wanted to offer. And truthfully, I think the drive around microfinance has more been about the impact it has on the individual, especially in the early years. It wasn't profitable for banks to do this type of work, but I think what people saw is that there was an incredible on-ramp that you could create for underserved individuals if you did find ways to offer these small amounts of credit, small loans to folks. And so I think it really opened up this whole field of recognizing the impact that finance had on individuals and households, the importance it had in enabling economic participation and economic growth. And then what's been really cool is to see companies and financial institutions develop that can service these individuals economically, typically through technology, being able to offer loans or underwrite loans in kind of a more technical way so that you can hit the scale that you need to make those types of products profitable. There's a ton of examples, Kiva as an example here in the US that some people are aware of, that's a little bit more on the kind of nonprofit side. But you can think of companies like Aspire. They're kind of like a buy now, pay later. Those types of companies are maybe like a generation or two after, this original idea of microfinance, or like, how do you give credit to people in a less traditional way outside of the formal banking system? And I guess the kind of OG, original microfinance company that people might be aware of is the Grameen Bank, which was based out of Bangladesh. So yeah, I think it's a really exciting field. And for me, it's kind of what technology is supposed to do, is to, democratize or broaden the reach of important, services that individuals benefit from. So, a really cool field for anybody that, is a big econ nerd like me.
Yeah, it sounds like I remember I heard a lot about microfinancing when it comes to like micropayments for artists and people that are creating work, maybe even podcasters.
I'm sure.
Music artists, instead of like, you think about the streaming, you get fractions of pennies from Spotify. What if I wanted my own platform and I wanted small payments through, by just somebody consuming it or something like that? But I think that's a really good explanation about, especially the buy now, pay later example. We see that a lot now, and it's kind of becoming more and more popular. And it sounds like we are taking something that there was a market for and there was a need for, but there wasn't really a profitability strategy for before, and making it to where now there is.
Absolutely. I would say profitability strategy and operational strategy. If you have to give small amounts of loans, or loans that are of a small size, then you have to give a lot of them, right? Yes. And so it's like, how do you get that reach? If you, 50 years ago you were just like a local bank, with the staff in a brick and mortar, building, it's going to be really hard to reach the scale that you need in order to make loans of that size work. But through technology or through platforms, like you're saying, suddenly you can open up that, and say like, okay, well, now I have an ability to reach 10,000 people. So how can I start to achieve profitability, but also get the scale that I need to make this business successful?
Mm-hmm. Can you explain how the blockchain is helping this?
Oh, interesting. Well, that will get us a little bit into the future, because I think right now the blockchain into things like microfinance it's very cutting edge. But yes, it would be my pleasure. So I think,
well, let's back up one second and say, what is the blockchain for anybody that doesn't know? I think most of our audience will be fully aware of it, but just in case there's some new listeners that aren't aware, can you give us just a quick overview?
Well, you were thinking exactly on the same page as me, John, because that was where I was going to start. Yeah, so when I think of a blockchain, I think of, at its core, an accounting ledger. Mm-hmm. Every bank has its own ledger that says, John has $10,000 in his account. Lisa has $5,000 in her account. Oh, Lisa, just made a payment to John. Maybe she just did, a bank transfer. Okay, we need to debit her account 100 and we need to credit John's account, 100 as well. So, that's just the basic functioning of a ledger. And the idea of a blockchain is to really create a ledger that lives in the internet and that can allow for multiple parties to simultaneously submit transactions to it, and have that ledger get updated without any single institution being the owner of that ledger or responsible for kind of managing the truth of the ledger, right? So it's kind of, it's this internet level accounting ledger that multiple parties can use at once. And the way that ledger gets updated is through various types of consensus. So on the Bitcoin ledger, you're using proof of work. On the Stellar ledger, we have a different type of consensus that we use, but essentially it allows that ledger to be decentralized. So again, there's no single company, institution, individual that's saying, this is, the accurate Stellar ledger. I'm going to make sure that everything is correct. It's a decentralized protocol and set of servers around the world that are managed by different institutions. And as long as those, servers with various copies of the ledger are all in agreement and in sync, the blockchain continues to go. Okay, so then why does that matter? Well, what it means is that you suddenly have this, kind of public service ledger, this open ledger that anybody can build on, and anybody can get access to. And so I guess I'll kind of talk a bit about Stellar just because that's a big area of expertise to me. But the vision there is that, you have this ledger that suddenly a programmer in Kenya or a programmer in Colombia or a programmer in Philippines, they can create an app similar to a Venmo or a Cash App. And that app can be plugged into the Stellar ledger. And so it creates kind of this open source infrastructure that's freely accessible and available for them to build on. And then what's really cool is that if somebody from Kenya wants to, send a payment to that app that the person in the Philippines built, they're all going to be compatible because they're all just submitting transactions and reading transactions off of this kind of open source Stellar ledger. And so suddenly, money not only can move around the world, more quickly. I guess if you wanted today to send a payment from Kenya to the Philippines, I can tell you it's going to take a little while and it's going to cost some money. So maybe you would say, oh, we'll use PayPal. You're definitely going to hit some considerable fees on that transaction if you're going to use something like PayPal. Or maybe you can use more of an open infrastructure like, Swift. And so you're going to be sending from a Kenyan bank, and then that Kenyan bank passes a transaction through several intermediary banks until it lands in the Philippines. Again, that transaction is going to take a couple days and take a long time. But on something like the Stellar ledger, moving money between accounts, it's basically free. And I think the even cooler thing is that you start to achieve what we call interoperability, meaning right now I can't send from PayPal to, Wise. These are two really popular platforms. Like they do not interoperate. But when you think of something like email, you can have Yahoo, I can have Gmail. It doesn't matter. We can still, send messages to each other. And so I think the dream is that we need to kind of get to that level of interoperability in our financial applications, and blockchain is a piece of infrastructure that really enables that. Mm-hmm. So, basically any application that is developed on one of these ledgers, whether it's Stellar or Ethereum or Bitcoin, they are innately interoperable with other applications on that ledger. And to kind of get to your point around microfinance and, how blockchain is going to help that, a big exciting area of microfinance, a big exciting area in the blockchain world right now is this idea of like decentralized lending or credit pools, where, for example, on the Stellar ledger, somebody can create a lending protocol that kind of in code will create some rules for both individuals who want to lend and individuals who want to borrow. So if I have some value on the Stellar Ledger, let's say that's a dollar stable coin, there's going to be and I'm holding that in my Stellar-based application. There's going to be a credit pool that says, okay, if you want to make some yield, if you want to get some interest on your dollar stable coin, you can deposit it into this kind of open lending pool. And what we do is we lend to really any individual out there who meets a certain set of criteria. Maybe they have to put up some collateral as a digital asset to borrow. Maybe they have to have a certain transaction history tied to their wallet. But you, if you want, can, deposit your dollar stable coin into this pool. Maybe you'll get 8%, yield on it. And then on the other side of that, there is an availability of capital to, any other individual who kind of meets the criteria, and maybe they can now borrow 100 digital dollars from this credit pool. So it basically is taking the function that many banking or financial institutions support right now and making that kind of automated through contracts on the blockchain and really opening it up. And I think the opening it up is the part that I get really excited about, where, these credit pools now can be something that's accessible to that developer in Kenya or Colombia or the Philippines. They can enable or kind of build in that lending protocol into their applications and make it available to their users. Now, I said this is pretty cutting edge stuff right now because, to be really honest with you, John, I think the main types of people who are using these open credit pools, they're primarily hobbyists or kind of very early adopters. But I predict that within the next 10 years, you're going to see very kind of mass market consumer applications integrating these types of financial products and services into their applications. And I think this is really the big opportunity for microfinance, because it is very difficult to get access to credit if you are, let's say, an online freelancer out of Nigeria or out of the Philippines. I mean, first of all, a lot of what you're getting paid is outside of your local banking infrastructure. If you're a freelancer in Nigeria, you're probably getting paid via PayPal, right? And so it's okay, well, how do you transition those statements for your bank? How do you kind of convince them about your new line of work? But if you are using an application that's completely online, that may be kind of much easier for you to do. It's kind of you're a native internet worker. And yeah, I just think the other big opportunity here is kind of an arbitrage in the size of these loans. So, for me as an American, I may say, sure, I can take $200 and try to get some yield on it. That's a reasonable amount of money for me to kind of put up. And that may fund, 5 people in Kenya, 4 people in Kenya having a loan that's impactful for them. And so I think right now there's a lot of inefficiency in our capital markets, especially for people on the smaller size, people looking for smaller loans. And I think there's a big opportunity for blockchain through these kind of open credit models to, allow Americans or other people with capital to get better returns on their capital in a really easy and efficient way. And then to make that capital available to people who have traditionally been underserved.
Yeah, so let me ask you a couple of questions about that, because and even in America, I had an employee of mine at the last place that I worked, and he was a software engineer, but for some reason he had, let's just say, trust issues. So he didn't have a bank account, he didn't have a driver's license, and he did everything through PayPal. He did his direct deposit through PayPal, and so for him, if he wanted to buy a car, he paid cash. and getting a loan was very difficult, if not impossible, for the way we have today. Do you think that with what we're talking about with blockchain and things moving into and even arbitrage, if I had money and I wanted to have a way to loan that out to people and maybe make some interest off of it as a side hustle or something, is there a future for that? Is that what we're talking about?
Yeah, I think so. I mean, it's at the end of the day, if he's doing everything through PayPal, that is kind of a gated ecosystem.
Yeah.
Although I think just maybe 3 months ago, PayPal launched its own digital dollar stablecoin, right? And so that's a big deal, especially for such a, we'll say, like, entrenched company in the financial industry to be really disrupting themselves. So what I would say the vision is, like, suddenly he maybe starts to hold some of his balance in that PayPal stablecoin. I think it's called PYUSD. And he starts to, basically be able to translate his financial activity on PayPal's, company ledger to the Ethereum ledger, where which is a blockchain where the PayPal dollar is issued. And once he does that, things start to get interesting because there is a huge and thriving ecosystem in Ethereum. It's actually the number one place where these decentralized credit pools are active. And so, suddenly maybe he can say, listen, here's my, wallet account history on Ethereum, all the PayPal USD transactions that I've done. How can I start to leverage this transaction history to start borrowing from these open protocols or open credit pools? And, there's still going to be some kind of like clunky pieces, I think, but that is the vision, to basically help people get out of these kind of gated financial platforms and to be able to, have their financial history be portable and really be owned by them, so that they can then take that to the greater market and say, like, what type of financial services can I get access to now, including lending? And then, yeah, to your point, definitely, I think for individuals who are interested in more yield for their money, I think now there's a lot of opportunity to be exploring this. And certainly, I think the big key is that you have to kind of transition from your, well, we say Web 2 dollars, which is like the dollars in your bank account or dollars in PayPal, which are these closed ecosystem. If you wanted to be a lender, you need to then move into stable coins or other digital assets, Web3 money. And then once you've made that transition to Web3 money, it's like, okay, where do I want to deposit my funds now so that they get yield? I guess I will say a bit of caution here because, there has been some, we'll say, bad behavior by some institutions in the Web3 digital asset space where, they tended to be companies that took in individuals' money and then did not really follow good practices. And I'm
talking about like FTX.
Exactly, like FTX. You also
had a lot of that too with NFTs too.
With NFTs, but there are also some just like pure lending companies, like BlockFi or others who, basically the whole premise is like, we'll give you 10% yield on your digital assets. And then they were like lending it in very irresponsible ways, right?
Right.
But what I'm talking about is actually very different from that. It's getting away from an institutional model, which your employee would like if he doesn't trust people, and moving to a very open and transparent, decentralized model where you're really trusting the code. Now, can there be economic shocks or things that kind of still, put some risk? Yes, definitely, for sure. And I would say that any of this kind of technology is new. And so you shouldn't, especially as an individual lender, like risk more money than you can afford. But I think the idea about these decentralized lending pools is that they are extremely transparent. There is no core counterparty. There's no company that's kind of like making decisions about how to spend this money. It's written in the code and it's kind of accessible in an open way. So a very different, cool kind of model to be experimenting with.
Yeah, it's almost like going back in time, because before we had big banks, we just traded individually. We didn't go through and or someone to store our goods and serve, our cash. We just kept it ourselves. It wasn't even cash. It was like coins or whatever. We just traded individually. And then we got to this model of sending it to a bank who took their cut. And now if we could go back to doing things on the individual basis, it sounds like more efficient.
It sounds like you're on the Bitcoin path, John. Come join the party. But yeah, no, I do think there's a very exciting vision for the future in finance, which is, basically having technology get to the point where individuals can again have sovereignty over their money. We're not just trusting these large institutions and, where you're able to kind of have custody or have ownership of your assets in a safe way and still be able to participate in the global economy seamlessly. At least that's a future that I'm really excited about.
So where does Airtm play into all this?
Yeah, great question. So Airtm is a very exciting company for me because it's right on the edge of using this technology, but also being a mass market company. So I guess if I can give a little background, Airtm started in 2015, so it's about 8 years old, and its founders are primarily from Latin America. And when they started the company, it was really because they were seeing hyperinflation in countries like Argentina and Venezuela, and they wanted to do something about it. They wanted to do something to help individuals in those countries basically protect their money. And so they started leveraging digital assets and crypto to give people access to this kind of like internet connected digital dollar account. And, they had to also innovate some technology to help build the payment rails that an individual from Argentina or Venezuela or Colombia could use to be able to go from local currency to digital dollars. And they did that by developing a peer-to-peer marketplace where, individuals could basically trade with each other, kind of like Uber. And I know there was a period where everything was like, Uber for this, Uber for that. But Airtm really did develop this network where essentially a local individual can use their local money to help you, buy digital dollars or sell digital dollars, and in a really seamless way where we kind of match people just like you do on Uber, which is very cool. So Airtm ran that business model for a couple of years. We kind of call it a wealth preservation business model because it's really focused on helping people save in digital dollars when they're experiencing hyperinflation. But in the last 3 to 4 years, the company began to evolve because it saw its users' behavior kind of evolving. And what they realized is that helping people in these distressed economies save digital dollars was, it was a very nice thing to do, but it doesn't really solve the problem, right? Because you're just kind of, people can only save so much. And it's really, it's just, it's not solving the problem. I don't know how else to say that. And they pivoted the company to really helping what we call digital entrepreneurs earn digital dollars. And so we're very focused now on earning as one of our, beacons and missions as a company. And so we have now an enterprise side of our business where we work directly with companies that want to typically do mass payments out to many individuals all over the world. And that is a very expensive thing to do, especially if those payments are like $100 or less. And examples of these companies would be like AI training companies, or what we call like digital tasker companies. So, help us solve this CAPTCHA, or, help us train an AI with photos or whatnot. And so a lot of these companies are leveraging labor from the places that I mentioned earlier: Kenya, Colombia, the Philippines, Nigeria. And it's a great work and opportunity for individuals in these countries, especially if one of their goals is to be earning in dollars. You can think historically, people migrated to the US to be able really to access the dollar economy. And now you can do that by just getting online. And Airtm is very focused on these users. Now, under the hood, what is our digital dollar account? Well, we actually give people an account on the Stellar blockchain. And the digital dollars that they're holding are USDC, which in my opinion is really the kind of creme de la creme of digital dollar stablecoins in the market right now. And so because we leverage the Stellar blockchain, we're able to support companies in making these mass payouts for very low cost. And then the individuals kind of can interact with their own wallet infrastructure and the peer-to-peer market to, on or off ramp those funds into their local currency. And we have Airtm is connected to over 500 payment networks globally. So if you're in M-Pesa, you can, do some work to train an AI, get paid $75 by a company in the US, instantly get that money in your Airtm account, and then, withdraw it to M-Pesa or your local Kenyan bank account in 10 minutes or less. Wow. And so, some of that is like blockchain under the hood, which enables that. Some of that is our business strategy that we've built out and the ecosystem natively on Airtm that we've developed. But that's really our goal, is to support digital entrepreneurs all over the world in earning dollars and taking those dollars home as cheaply and quickly as they can. And then also to support the enterprises that they work with. And then to really nurture that ecosystem, which is exciting. And then you can probably imagine that on our roadmap, something that really excites us is saying, okay, you're earning on Airtm. How can we now help you get access to credit? How can we now help you, take your payment history on Airtm and passport that so that you can access other types of financial services?
Yeah, that sounds awesome. If people are interested in learning more about Airtm and what you guys are offering, or connecting with you online, how can they get in touch with you and find out more?
Sure. So our website is airtm.com. So it's AIRTM.com. You can download our iOS or Android app, and we also have a web app. If you're a business, we have a whole enterprise site, and you can just check out the services we offer there. And then for me personally, I'm on LinkedIn. And I'm also on Twitter, Nestorius828. So I tweet from time to time, almost exclusively about blockchain and econ stuff. So feel free to reach out to me there.
Awesome. I'll link that too in the show notes at geekleader.com so people can click there and get to your LinkedIn and Twitter. And again, Lisa, thanks so much for coming on the show. Really appreciate it. I feel like I learned a lot about financial blockchain and what's going on in the world today when it comes to financial transactions. So thank you again.
Thank you so much, John. It was a great time.
Hope you enjoyed the show. Please go to geekleader.com to learn more about what this guest is up to, click on their links, and connect with them online. I would also greatly appreciate it if you could leave me a rating and review in Apple Podcasts or wherever you listen to the show. Make sure you've subscribed if you haven't already. And if you feel so inclined, you can leave me a tip by going to geekleader.com/tip.